Tesla recently released its Q4 production and delivery numbers, and a lot of analysts have described it as a misseeing that Tesla did not meet consensus of investment firms like Wall Street. However, ARK Invest Brett Winton does seem to agree with this. According to him, the car company's Q4 deliveries are not a miss, since Tesla delivered 40% year-over-year growth against a market that's expecting almost an 8% decline. He believes that EVs will dominate the car market in the next 5 years, and then in 2027, there's going to be around 60 million electric vehicles sold, with Tesla producing a large percentage of this figure. Hey everyone, welcome back to Tesla Tomorrow. Tesla's stock price decline last year was largely driven by the unpopular actions of Elon Musk. The car company also faced and still faces concerns with the demand for its vehicles. Several investors believe that demand is dropping, especially for the crucial Chinese market, following subsequent price cuts for its EVs in this location, as well as in other EV markets for Tesla. But is there really a demand problem for the car company? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe, and ring that notification bell to keep up to date on everything going on with Tesla. In the fourth quarter of 2022, Tesla produced over 439,000 vehicles and delivered over 405,000 vehicles. According to the car company, in this year, vehicle deliveries grew 40% year over year to 1.31 million, while production grew 47% year over year to 1.37 million. However, a consensus of analysis estimates compiled by FactSet stated that Wall Street was expecting Tesla to report deliveries around 427,000 for the final quarter of the year. Other estimates updated in December and included the FactSet consensus, and they also ranged from 409 to 433,000. Following the release of Tesla's Q4 production and delivery numbers, several analysts have claimed that the decline on the demand for Tesla cars is becoming more evident. However, Brett Winton, who is the head of research at ARK Investment Management, has stated that rather than a miss, Tesla's Q4 numbers are groundbreaking, and he added that with higher production rates in the next quarters, this could spur the stock price to go as high as $400 this year. Tesla had a record-breaking Q4 despite the drop in production at its Shanghai factory in China. The car company suspended production at its Shanghai plant in December, according to an internal notice, bringing ahead a previous plan to pause most work at that plant in the last week of the year. Although Tesla didn't give a reason for the announcement, it had cancelled a morning shift at the factory, telling workers they could start their break. Giga Shanghai is Tesla's most productive manufacturing hub, and even became Tesla's exportation hub, as the automaker produces vehicles for international markets, especially in Europe and Asia. So a stop in production would have significantly affected production in the last quarter of 2022. Had this not happened, delivery numbers would have increased and Tesla would have likely recorded up to a 50% growth year over year. Tesla also plans to run a reduced production schedule at its Shanghai plant in January, extending the reduced output it began in December. The car company's February numbers in China are out, and it confirms that the Gigafactory in Shanghai is maintaining an incredible output of more than 600,000 electric vehicles per year. However, Brett Winton believes that whether Tesla hits its growth target is a function of production and not demand. No doubt Tesla's demand may be dropping, since EV buyers may yet to conclude that their decision to buy is due to tax credits on some of their cars. But this will eventually pass, considering the several price cuts that Tesla is doing in most of its markets. So rather than wait for another incentive or for Tesla cars to qualify, it could be cheaper to buy the car owing to the reduction in cost. Tesla vehicle deliveries represent only one measure of the company's financial performance, and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors like the cost of sales, foreign exchange movements, and a mix of directly leased vehicles. According to Winton, Tesla is at least 3 to 4 years ahead of the industry in driving transition to EV, and the car company will actually continue to drive down cost as they increase production. They're also going to be releasing new models and products in subsequent years, so in the near future, Tesla may be able to sell every car and product that it manufactures. The automaker is also set to release a new vehicle platform worth about half the price of the Model 3. There's a lot of excitement about the new platform, and it's expected to be a $25,000 EV. Although the project has been delayed and may not arrive for the next couple of years, it does appear to be on the way, and at Tesla's Q3 earnings call in October of last year, Musk disclosed that the next generation platform is going to be half the cost of the current Model 3 and Y platform. Musk also claimed that production volumes for this car will massively surpass that of the Model 3 and Y, and will go far beyond any other Tesla vehicle manufacturing quantities put together. He also added that he's going to harness the full potential of production enhancements like GigaPress, which casts large chassis sections in one piece. While it's still unclear when the EV will be set for production, Tesla is already making preparations for it, and the automaker recently announced that it will hold a new Investor Day on the 1st of March. This is where it will discuss the new vehicle platform. Tesla wrote about the event in a press release, stating that it plans to host its 2023 Investor Day soon, and that the event will be live streamed from its Gigafactory in Texas, with the option for some of its institutional and retail investors to attend in person. According to the car company, its investors will be able to see its most advanced production line, as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with Tesla's leadership team. The automaker also added that it would talk about capital allocation during the Investor Day, and could also include the stock buyback program that Musk originally announced in October. Brett Winton believes that if Tesla can successfully produce this low-cost EV, then it will once again become the standard for the EV market. The Tesla bull had previously given his take on innovation and how this can be a massive edge for companies. He also pointed towards the similarities between innovation now and emerging market investments. Winton cited that there is a lot to expect from Tesla in the coming years, and these could potentially increase the car company's demand and in the long run its stock price. He particularly expects that if Tesla can achieve full self-driving, then that's going to be huge for the automaker. Former Wall Street analyst and Tesla bull Gary Black also believes Tesla's stock is currently undervalued. According to him, the current noise is not impacting Tesla as a business, but rather the company's stock, and the fear of demand to decline, especially due to price cuts in several markets, as well as the uncertainty of Tesla's stock going up the chart, has caused several investors to lose hope in the car company. But there is still a lot of progress to be expected in the coming months. Tesla will post its financial results for the fourth quarter and full year, which ended in December after market close on the 25th of January 2023. Its net income and cash flow results will also be announced alongside the rest of its financial performance. So it's important that investors keep their hopes alive, especially since Tesla is still in its early years. However, while it is bullish to expect increased production for Tesla in the coming months, it is also important to note that the current perceived drop in Tesla's demand may not be entirely false, as the car company is likely going to cut production in China, one of the biggest markets globally. Tesla has continued to transition towards an even more regional mix of vehicle builds, which has led to a further increase in cars in transit at the end of the quarter. With the upcoming improvements, Tesla could soon push production to over 1 million units per year at its Shanghai factory despite recent challenges, and record even higher production rates overall due to the ramp-up across its factories globally. But do you also share the same thoughts? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.